Hello. This week we've seen oil and power prices rise whilst gas prices have softened compared to last Friday. So let's have a look at what's been affecting the price movements this week. Oil prices were bearish on Monday and the front month's contract fell just shy of $0.8 per barrel. The downward movement was in response to the Russian oil minister announcing OPEC may not agree to extending the cuts when they meet on the 1st and 2nd of July. All of Monday's losses were reversed on Tuesday. Tension in the Middle East pressured prices higher, and market participants seemed to focus on the tensions between the US and Iran rather than on the trade war with China. Prices continued to climb on Wednesday once again, pressured by geopolitical concerns, as well as the weekly inventory report showing a decline in crude stocks of 12.8 million barrels per day. Prices eased somewhat on Thursday, although Brent still closed $1.29 per barrel higher compared to last Friday to settle at $66.36 per barrel.
The system was short on Monday, which pressured prompt contracts higher. However, near-term and longer-dated contracts all settled lower day on day, thanks to downward movement seen in oil. It was another bearish day for gas on Tuesday, despite the gains in oil. Lower carbon prices and forecasts of milder temperatures directed the curve. Prices rebounded on Wednesday in line with rising wider fuels market. Coal, oil and carbon all edged upwards throughout the session. Imports of LNG were also lower than what had been seen recently. The bears took charge again on Thursday and all gas contracts softened. This was despite the system being short in the morning and demand outturned at 10 million cubic metres above the seasonal norm. Last night, all contracts closed lower than last Friday. July 19 was the biggest mover, losing 3.55 pence per firm, which is 13%, whilst most contracts beyond January 20 lost around 1%.
All power contracts posted gains on Monday as higher temperature forecasts increases the demand for air conditioning. With temperatures rising to 40 degrees and above across Spain and France, demand on the power system is high. Renewable generation was also lower than the seasonal norm, meaning that more expensive forms of generation was used. As coal prices eased on Tuesday, so did power prices. Forecast for wind generation was revised upwards to 5.5 gig from the 30th of June, which also pressured prices lower. Prompt prices fell on Wednesday as forecasts of solar generation increased by 50%. However, bullish oil, coal and carbon pressured all curve contracts higher throughout the day. There was some relief for prices on Thursday. However, contracts from winter 19 onwards closed flat to higher compared to last Friday, whilst near-term contracts closed lower. You can download the full version of this report from our website. Thanks for watching and we'll see you next week.